Good morning, everybody. This is Patrick MontesDeOca, CEO of the Equity Management Academy and TikToker trading leader. We are live streaming from TikToker, and let's go right into the live trading room here, looking at the gold market. Trading last 1843.60. Let's take a look at the action here that we have for the day. And we can see that the market is trading above the average price for the daily and the weekly. Let me go to the Thinkorswim chart, where I have posted this here manually to be able to teach and coach a little better with this platform. And we're going to take a look as I identify pretty much the codes that we're going to use for day trading today. By the market trading above the average price daily and weekly, it has activated a bullish price trend momentum. There are no trades right now based on the AI of the VCPMI for day trading, because it tells you that you do not want to trade around the average price or around the mean. The average price or the mean is a 50-50 standard deviation. And the AI of the algorithm, which is written in C++, an easy language code, identifies the highest probabilities for a self-directed trader. And that would be at a 50-90% relative implied volatility to the mean, which would be on the sell one level, or the buy one level of 1830, which is a 50-90% relative implied volatility to the mean. So what I do here as a self-directed trader for myself, I look for the extremes of the supply and demand. And I manage my inventory according to how the VCPMI identifies the trend direction for the daily, the weekly, or the monthly trends. And I use them to position myself accordingly. What we're doing here is we're looking at a day trading program that has identified for us the extreme levels of the supply and demand. Now, these are pivot points. We use our own proprietary information, codes, data, and we extrapolate the extremes levels above or below. Additionally, the AI identifies it in color, and it tells you that red in the code, meaning the sell one or sell two level, begins to identify the distribution of supply, where the market may or could experience supply or sellers come into the market. So there are no signals here in the gold market for day trading. We are long. We have a core position long. We use this correction here to add to our long-term core positions as the market validated pretty much that it found buyers as identified by the code here, by the AI. In the same fashion, when the price is at the extreme above the mean, you can see here, for example, the price trading at about 1865. It after making a high of 1879.98, 1880, rounding it off, this came in to the weekly targets of 1874 that we had in place prospectively. And you can see here that the market pretty much traded its supply and demand around that average price. I'm sorry, around that sell one weekly level, and activated a short trigger. It could not go through above the sell one level weekly, which it could have gone to 1906. Even though the AI identifies the area of distribution of supply, it tells you the area where the resistance, you might say, or the supply or sellers can be identified. How do you identify that? Well, you see the price action, what it does in relation to these numbers, and the AI tells you that closing below this level activates a short trigger. So knowing this information, you could be selling into this, scalping, shading the rally, fading the rally, knowing that 1874 is a pretty high probability level of resistance, if you want to classify it using common technical analysis lingo. But the AI converts this intelligence a little deeper than just identifying the pivot points. We're looking at a probability model that identifies the extremes above or below. We're looking at the gold market coming down here, activating the short trigger from the weekly sell. When it does activate the short trigger, it automatically activates the target below. And in this case, if we're looking at the weekly signal, we're looking at the weekly target. As it came down, even below 1865, it activated a daily. It began to integrate the daily numbers, if you look on the left of the chart. So what I do is I integrate the numbers, the prices, daily, weekly, and monthly. And I look for the highest probability factor of a perfect alignment occurring. And when that occurs, it's a pretty high probability, or it is the most optimal signal of the algorithm. So here we activated a weekly, coming back, a weekly signal. We activated a daily signal. And, the market told you it failed to get through above the 1874 or even go up to 1906. And automatically, that 1840 is going to be activated weekly, and the daily activated, the daily average price, and it was completed on the 9th at 6:45 a.m. The market reverted from the mean into the sell one weekly level roughly at about 1850, 52. We've been looking at the 1849 level. as well in the longer term resistance levels. So we tested, reverted back, found the resistance or more supply, and came back down again and tested this average prices again, this average price level, closing below, activated the obviously the buy one level daily and the weekly average price of 1821. Now, as the market came down, you can see that it came down into that buy one level here on the 11th. And activated a buy trigger. The AI, the VCPMI was expecting a buy into this 1830 area, and we've pretty much prepared our traders in the private room with this kind of information prospectively. And we recommended to get long as the market activated a buy trigger. And we've been in this signal actually since the 11th at about 3:30 a.m. And when again, going back to the systematic process that we go through of the algorithm, is that when the signal is activated, the first time it touches the target, it completes the previous pattern. If it closes above that level, it activates a buy trigger. The buy trigger automatically activates the protective level, which is the stop below, and your target is the level above. And in this case, we're looking at the daily mean of 1842, which was completed. Not only was the daily average price of 1842 completed, but the market, even though it came down below the average monthly price of 1840, which activated a bearish price momentum, activating this level, validating that it found buyers down here, reverted back up again. And when it reverted back up again, that 1840 level, it unified the daily average and the monthly average into a major signal, a very strong signal that you see here, reverting, testing, validating, and again unfolding the what appears to be is the upward pattern, the uptrend momentum that identifies the target of 1852. Let's watch the market here. We got a live signal. And let's see what it does. It's a little bit of, it's showing again, it's into this area of approaching distribution of supply that starts at 1852. You got the Bollinger Bands into resistance, but let's see if the market has the buying power to meet the target of 1852. And this is pretty much what I'm doing here. I'm carrying long-term positions in metals. I have a core long-term. I've been recommending to add to this correction, as we could be looking at the annual lows already being in place. And obviously, if that's the case, where we see that the lows are in place in the gold market, it's a leading indicator for silver. It's a leading indicator for the precious metal sector, and so it's a leading indicator for the gold mining shares, which are beginning to turn around as well. So we are long. We're holding long. There are no day trades right now, but we're looking for the market to complete the target of 1852 and then see where it wants to go. Depending on, what happens up there, I might be inclined to take some profits off the table on my derivatives. One of the reasons why I trade in this market here, in the metals markets primarily, is because not only it's an economic indicator that is being affected right now by the monetary policies, you might say, that are being implemented, and the fiscal policies as a consequence of the pandemic, the tremendous need that the system is demanding right now from the government with regards to the stimulus, is a very strong, solid, fundamental picture that's building up for the gold market. But to make money, you have to be, I would say, a little more astute as to how you use that, fundamental intelligence. And for me, using fundamentals per se, based on what somebody says or the news or whatever, I found sometimes is lagging the market, and it's always behind the curve. And sometimes when you get, we have a saying, pretty much traders on the floor in New York, when I was there, we used to have a saying that it was buy the rumor and sell the fact. You want to buy the rumor of inflation being created by the stimulus that the federal government is implementing and is applying to the system because of the tremendous damage that was done by the pandemic. That's the rumor. Inflation, it's inflationary. It's bad for the dollar. It implodes the asset value in dollar terms. It weakens the purchasing power. That's the rumor. That's obviously, not ideally, but obviously what's happened, when you take a look at the dollar since 1971 against gold. So as the market begins to unfold into this scenario of inflation, and we begin to see that reflected in the price of gold, the price will tell us how much of that information has been digested in the market, by the market. And a point in case is when the market made the high of 2089 here on August 7th, it discounted, based on the rumor of the damage of the pandemic, how much, damage it was going to do back in March, and the market took off on the news that this crisis, and pretty much the Feds gave the key. The word was that we are going to print as much money as it's needed. And that was opening up the gates, the Pandora box of inflation, opening up the doors of the printing presses. And the market anticipated that, and it rallied to 2089. It rallied over $600 since March. This was a historical move, but the thing here is that at 2089 in the gold market, it looks like the market discounted the worst possible news. The same thing, the Feds announced that they were prepared to leverage up to 10% of GDP. And so that you're talking about $23 trillion that they were prepared basically to print. So we don't know exactly, right, how much money they're going to print. All the market knows is that it is a must, particularly go into another lockdown, that it's going to print. How much is the question? But the stock market as well took it very, very bullishly that the Feds will inject unlimited amounts of money into the system. And throughout this, obviously, process, they guaranteed to be the buyer of last resort. So it gave the market a sense that they would take the other side of the trade, basically, to provide the market the confidence level, that it is required at this stage of a crisis like this, of a pandemic like this, or the consequences could be really, really devastating. The market took it positively. The gold market rallied to 2089, and wow, we've came down since, and we've came down to about 1767 as of last week, and from there we're back up to 1851. That's almost $100 already from the low. So the market is trading in $100 ranges, as it used to before in $10 ranges. So I would say the leverage has increased 10 to 1 easily in the futures market. So completed target, 1852 was the target completed. $18.52 target completed. Now this is the daily target of 18.52. So now we're going to see what the next bar does. And on this bar, basically what it's doing is it is completing the previous pattern, and it's going neutral. And the close of the next bar is going to determine whether the market, is continuing to show buyers at these levels that could take the market up to 1865. So let's see again, after the completion of this, what the market wants to do. But here, for example, you have a chance that if you're long on some of these derivatives, like Nugget or GDX, or any of the gold mining shares, I think they're confirming what the futures markets in the gold is confirming, that the 1867 low made last week potentially is going to be the annual lows for 2020. And basically closing above 1840 was the confirmation of these lows being in place. So to all my traders, subscribers in the trading room, continue to hold, obviously, your derivatives, continue to hold your position on the long side, continue to hold the long-term buyers, bull calls, leaps, shares, derivatives, as we are moving up into that weekly target of 1874. That also has been activated by the market trading above the average price of 1840. The weekly average price of 1821. So when you take a look at the price in combination of all the three trends, the daily, the weekly, and the monthly, you can see the momentum is bullish because the market is trading above the average price of all of those three trends. And so the average price is your your equilibrium. It's the fair value, you might say. It's a 50-50 standard deviation. So right now, this daily signal activated a 50-90 standard deviation. On the first bar, it simply tells you what to do. You know, if you're long, take action, take profits. If you bought it from the B1 at 1830, you're looking at 1852. That's a $2,200 profit per contract. One of the other instruments that we are trading more actively along with the gold market is the GBTC, which is the Grayscale Bitcoin Trust. And it's activating a buy trigger here at 2083, and it's a great instrument to trade, but be aware that this is a very volatile instrument. This is a virtual asset. This is the Grayscale Bitcoin Trust. And it's a registered ETF now that you can trade Bitcoin. But this is not the futures contract. This is the trust that basically holds the Bitcoin. Grayscale Bitcoin Trust. This is an ETF. So it makes it real easy, you know, for me to be able to, as a trader, you simply trade the market without getting involved with the wallets and without getting involved with all the other technology and all the risk that runs without a regulated body, at least, you know. So good luck to those that are trading outside of the box, outside of the system. You know, it's your choice. It's your risk. And if you're comfortable doing that, you know, there's nothing that anybody can say in how you manage your financial future. Personally, I want to hold the gold market, but I want to trade Bitcoin. I trade actively this ETF. It's a great ETF to trade daily as a day trade. And so we're very happy with the results that we're getting in the application of the VCPMI as well in virtual currencies. But it is not a substitute for the gold market. Let's go back to the gold market here. So you see here that after the target was completed, you know, now we're trading below it. And if the market closes below at 745 in about 15 minutes. Obviously, for conservative traders, then you can look to go short, with a protective level above of 1852. This is how you define pretty much the trade, the day trade now that has been activated. A trade alert has been activated. And the signal is a close below 1852 at 745 activates a short trigger. So let's see and wait and see what happens here with the gold market. Silver is trading above the average price as well. It traded above the weekly average price, and it's trading now above the buy one, completing the target, the average price daily of 24.77. The E-mini looks like that 37.14 is has activated so far this short term top, and now we have come down into the weekly buy two level. Oh, excuse me, this is the buy one level actually. Let me just correct this, because this is the buy one level, not the buy two level. And the buy two level is all the way down to 35.53. And so it's come down into the weekly level as well as the daily level, and it's in that support zone that the AI tells you that it is a very strong mathematical probability level that buyers can be identified down here. So sure enough, it came down to complete the 36.22 level and reverted to the signal here, and it has completed this pattern here now. So the signal would be a close above 36.49 would activate another buy signal above the buy one level. And the buy two level is at 36.27. We don't want to sell into this area when the market is trading below the buy one or buy two. You do not want to go short there, because it's the opposite of the extreme above the mean. If the buy signals are telling you that it's a 90% probability from here, obviously the short signals are only giving you a 10%. And as a trader, I take it, and I recommend my traders to take the highest probability trades that can be identified by the VCPMI. Let's go back to the gold market here and see how the energy is resolving itself into this level here. But this is the way that I trade, and this is pretty much what I look for. In applying the VCPMI to the instruments that I feel comfortable in trading. And in trading gold, silver, the E-mini, and GBTC or Bitcoin is, I think, a pretty wide, diversified concept, for me, to to trade because it covers precious metals, gold and silver. It covers pretty much the stock market with the mini, and obviously the Bitcoin or the virtual world with Grayscale, a Bitcoin Trust. Very quiet. It's getting very quiet here on this Friday. And I think pretty much as we come into next week, it's going to get even more quieter as we move into the holiday time. You can begin to see already the holiday season coming upon us. Most people think that during the holiday season, the markets tend to get quiet, but I have found it to be the opposite. Sometimes there are some big moves that take place in the markets because there is no liquidity. Everybody's on vacation, or most people are, not trading during the holidays, and I don't know. I just found that sometimes you get some very surprising developments, and particularly with the kind of environment that we're in right now, politically, economically, it's a high risk period. I think more than any other time in the history of this country. We're at a time where I think our democracy is being tested, capitalism is being tested, the integrity of the system is being tested. And it's creating a lot of volatility. The wealth gap has widened historically more than any other time in the history of this country. The Main Street economy has collapsed, while the elite economy, so to speak, has been able to make the transition from that physical economy that we saw collapse back in March to this new virtual economy that we're dealing with. And along with that virtual economy, obviously, I think we have to create a currency that we can deal with in that virtual economy. Fiat currency is disappearing at a faster rate than any other time, as long as I've been around. And I think the beginning of this demise, I go back to, again, 1971. It was probably the biggest mistake that was made. Well, I mean, depending on how you look at it, obviously, it wasn't such a big mistake for the leaders that were part of the plan, to create this debt economy, because they became billionaires. When you really think about and you talk about the elite, these are the people that were responsible for creating the Federal Reserve Bank in 1971, for lifting the gold standard of the US dollar, and created this bubble, the beginning of this bubble, this debt bubble that just continues to grow. And what I see here is basically a transition from a fiat currency economy into a virtual currency and economy, which I think is a blessing, because if we didn't have this bridge, if we didn't have this technology, if we didn't have this, virtual economy that we created, I'm not sure where we would have wind up economically, globally. So while things are beginning to recalibrate, and I think we'll know more clearly as we move forward how much more stimulus is going to come in, or basically what that's saying is how much more are we going to leverage the U.S. dollar based on the U.S. asset base that we have in order to pump money into the system, into the economy that's needed. We're going to be getting a lot of, I believe, negative news regarding real estate, regarding just about every sector in the economy as we move into the second lockdown. And, without the aid of another stimulus package, short of all of the political rhetoric, it's a lot of pain for Main Street. A lot of distortion, dislocation. It's really, I believe, an unfortunate situation that I think all of us are victims of this rotten, corrupted system that was created, that is full of debt, that still is under the belief that debt is good, that, debt can make a strong foundation for an economic system. It may be great for a selected few. And I think, where we're moving into is a socialistic economy, when you really think about it. And the more the government, and the more we have to rely on the government, the more control we're going to give the government to go into this realm of socialism, particularly if the system begins to fall even deeper in trouble, where the government officials may have to issue universal income. So we have a lot of, I think, issues and challenges ahead of us, socially, politically, economically, and health-wise, with this pandemic. And, when I think about, for most people that depend on the system for employment, we could be looking at an unemployment number that could be worse than what we saw back in March, which would be just devastating. I am not an economist. I am not, a PhD in math or anything like that. What I am is a self-directed trader, just like you, that chose to use this vehicle, this instrument, these markets, to take control of my financial life without having to depend on the system, because the system has failed me several times, as most of us probably can verify. But we want to continue to believe that we live in a system that's fair, equitable, for all, a democratic system of capitalism, where you have the freedom of enterprise, where you have the freedom of taking, a risk if you choose to do so, and take the responsibility of the results accordingly. I think these markets are probably one of the few that are offering a tremendous alternative to taking control over your financial life. I mean, if you look at the numbers that are the statistics with regards to, for example, Robinhood, the type of traders that go into Robinhood, there's millennials are learning to trade the markets, and they see this as a way for them to, get rich, get wealthy outside of the system. And that's what's happened basically with the stock market, with zero interest rates, the ability to borrow money, if you qualified, literally at zero interest rates. You can take that money and buy your own stock or reinvest it in the stock market and literally pay no interest on your money. And in some cases, no risk. The thing that I see that I'm kind of keeps me awake at night sometimes is the reality, which is on the other side of this, that we need to address at some point, is how all of this is going to be justified and paid. All these trillions of dollars that are thrown into the system, how is it going to be paid? If the economy does not recoup, if we don't get the velocity of money that we need, all the indicators about inflation that are coming out of the government are indicating that we have no inflation, we have no inflation, we have no inflation. But just take a look at food prices. They're up, soybeans up 50% from March. All the grains, crude oil. And they're saying, oh, there's no inflation. What I believe we are seeing is stagflation in that in some areas, in some assets, you're getting runaway inflation as you have the stock market, as you have it in real estate. I think all these sectors are building a bubble. And right now, there is a little bit of distortion in that, in some sectors, obviously, are collapsing. The service industry, restaurants, hotels, which were part of the old physical economy, may not be around as we knew them. So it is a reality check that I actually am doing for myself as we move into the end of the year, and trying to deal with the reality of what happened, trying to recalibrate for myself, for my family, and also to make aware my traders, my subscribers, pretty much how I'm using this current environment to recalibrate and reposition myself to what I believe is one of the greatest opportunities in our lifetime on the other side of this coin. This truly, truly opens up one of the most exciting opportunities that we have ever seen, particularly in my lifetime. My kids might be the first as well. And possibly, I hope, the last. But the key question that I really ask myself, and it's important, is how is all of this going to get paid? And through all this money that's being poured into, you're getting a lot of corruption, a lot of businesses that shouldn't be getting the money or getting it, a lot of zombie businesses. So, we really don't know yet what the fact is, right? And this is coming back to buy the rumor and sell the fact. And so what I expect that when the price of gold reflects the real condition that we're dealing with economically, with regards to our economy, with regards to our fiscal policies, with regards to our monetary policies, it will be reflected in the price of gold. And I believe that gold needs to move and test the previous high that we saw of 2089. That was made in August, in September. And the targets above here that we're looking at from the measurements that we're getting of the long-term VCPMI signals is about 2140. The monthly sell one level is 1913 to 2045. And if we're looking at the signal being activated above the 360-day average of 1810, we're looking at 2164 as the sell one level. 2164 to 2442. That is the 360-day annual targets. From the calendar year that started on September 28, 2020 to September 28, 2021. The 9-year cycle gives us targets of 2299 to 2712. Continue to hold your core long-term position in the gold market and use any correction basically to add to your long-term position. I am interested in buying on corrections as the market is in an uptrend here. But if you want to take a risk on the short side, for example, on the short end of the market here, you can see the market activated a trigger, a close at 1850. 1852 was the protective level here, and the target is 1842. Um, 745. Yeah, this was the short trigger here at 1850. Right now, the market is, 1848. So we're not going to follow that. But this is how to identify the trigger points. Once again, I hope that you are, getting the intelligence to make a difference in the bottom line for you. Sincerely, I hope that when you come here every day, that you become a better trader. In the meantime, my friends, have a great weekend. Be well. Take care. I'll see you Monday.
The risk of loss in trading commodity interests can be substantial. You should therefore carefully consider whether such trading is suitable for you in light of your financial condition, and considering whether to trade or to authorize someone else to trade for you. Past performance is not necessarily indicative of future results.
The Ticker Talker app brings the powerful trading technology tools of the Ticker Talker desktop platform into the hands of its users who are on the go. Ticker Talker connects novice and advanced traders with industry leaders who are providing real-time trading content throughout market hours every single day. The Ticker Talker app allows traders to follow and get real-time push notifications of trading